Well, I think, Becky, you had two things going on. Number one, Apple has a very distinct trading pattern where in the month leading up to a new product launch, the stock is up about 76% of the time, which is pretty high with good returns. And then the day they actually do the product launch, the stock's actually down about 76% of the time and struggles for the next 2 weeks. So it does the sort of run into the event and then it just stalls out. And so, that was one thing, is just sort of the technical pattern, and it's very consistent. But the bigger issue in my mind was the following. You had the Epic ruling coming up, which would go after their App Store revenues. And then the final piece, which is really the fundamental portion of it, is if you look at their revenue streams, this company benefited tremendously from COVID. Mac sales, iPad sales, they were down year over year in the December quarter before COVID started, December of 19. And if you look at it in the March quarter, both of those businesses were up 70% plus year over year. Same thing with iPhone. iPhone was down 4 out of 5 quarters year over year before COVID. In the March quarter, it was up 66%. People were at home. I bought a Mac for my kids. I bought an iPad for my kids. They were studying at home. So a lot of that stuff is going to reverse, like we've seen with streaming, with Netflix, with e-commerce, with Amazon. You're going to see the same thing, I think, with Apple when you get into the September quarter, December quarter, and those results come out as you back off those numbers. And don't forget, smartphones unit sales were down 4 years before COVID hit. So you already had lengthening replacement cycles. And the new iPhones coming out, they're going to have just tweaks to them. It's not revolutionary like the 5G launch was last year.
Hey, Dan, it's one thing to say, okay, I don't want to hold this stock anymore. I think it's seen some of the big gains and it may have a little tougher sledding ahead. It's another thing to short it. And that can be a pretty tricky and something that really takes an awful lot of guts to go through with. How strong is your conviction on this, and how willing are you to ride this out if the stock actually does trade higher after the event?
Yeah, I mean, you're 100% right, Becky. Obviously, in the age of meme stocks and, GameStop and AMC, et cetera, you have to be very careful with your shorts. And right now, there's a tremendous amount of stimulus in the market. But that's the other thing that makes me feel relatively good about the timing of this, is that I think there's a good shot the Fed next week says, you know what, we've met the dual mandate, or we're getting close. We plan on tapering later this year. And I think that's going to start the process of removing all of the stimulus we've jammed into the market, because it's pretty simple. You look at last year, the pandemic started. The S&P was up 16% on a price basis. You look at this year, the pandemic's continuing. The S&P is up 19%. The average return since the 1920s for the S&P is 6% a year. So either you believe a global pandemic is 3 times as good for the world, or something else is going on, and that something else is stimulus, and it affects the biggest stocks out there, as well as names like GameStop and AMC. So I think the timing's actually pretty good for putting it on as well.